Welcome back. Let's get to the commodity market action. Jonathan Barratt, Managing Director of Commodity Broking Services, staying with us still. Matthew Kidman from Wilson Asset Management. Jono, we saw a fairly sizable reaction on commodity markets to the Fed. Was this just a risk trade, inflation trade that came back on?
Karen, I'm not quite sure, but it's very volatile across the board. And in the last couple of years, I haven't seen oil as volatile. It's just trading a range, 83 on the top, 79 on the bottom. And when you get in 2% swings every night, it's very hard to take a position.
Is this telling us that we've got a lot of longs and a lot of shorts, but just in both directions, no one's really been able to call this market?
No one's been able to call it. We get bullish one day, we get bearish the other day. I was down the water the other day on a position in crude. Now it's back in the water. I'm making it. So it's very hard. You've just got to take your resolve. You've just got to run with it at the moment.
But is the key which side we break out? Are we going to break out in the upside in gold, oil and currency on the downside all at once? Is that how it feels at the moment?
It's starting to feel that way. We've got a bias which we're liking, and that's going to be checked by what we feel how inflation in India and China will develop. But at the moment the bias is that we will break out towards the top side, and it's just positioning for that. But it's very hard. Oil's tried 4 times to break through this level. It hasn't made it. So that's the risk you're taking.
John, I agree with you. There's been a lot of fatigue whenever we see oil try to make a convincing break above $80 a barrel, but there does seem to be a lot of positive momentum. Is it possible in the short term we can challenge the highs of the year that we saw back in January of close to $84 a barrel?
Actually, I think it's possible. I think we've got to take that view that we're going to challenge and break it. There are really positive things out there which are occurring. The Fed keeping their interest rates low, more optimism, Eurozone looking better, Greece under control. We've got to take that all as a package and say, look, things are not too bad at the moment, and that forecast, our optimism must be there to say, let's try and break up through that level. So we always have a bit of a go on it every time it gets close to this area, because when you trade oil in particular, you've got to trade with the break, but make sure if it falls back in the range, you're not with it.
Jono, if you're sounding just a little bit unsettled by the volatility on oil markets, you've got to imagine what the OPEC members are going through. And the meeting is on later today. What do you expect we're going to see?
Look, I think OPEC have made a decision that they're quite happy to see supply where it's at. I don't think we're going to see too much of a change or anything in that. The last series of meetings have been pretty much non-events, so I think that they're happy to see oil where it is. Obviously a little bit higher is good, but they understand that if oil continues to trade higher, that's going to hamper growth. If it hampers growth, it'll hamper demand.
Jono, very interesting headlines coming out from the Nikkei reporting that that Rio Tinto and Teck Resources have struck a deal on coking coal supply with the Japanese steel makers at a 55% premium. This essentially looks like a carbon copy of what we heard from BHP earlier on this month. Does this tell you that the coal space is looking increasingly compelling now?
It does. There's a lot of moving and shaking in all that area at the moment, Cherie. And yes, that's a sector which we can focus on. But let's look at the themes underneath it. And it's saying that our primary inputs, there is demand for primary inputs. And you just go and look at what's occurring, that people want to have a piece of this action. Whatever happens, you're not going to stop a whole lot of Chinese investors looking to buy new cars. So you're going to need that demand for primary inputs. And it's only going to be a shock that'll change the way they think. But at the moment, I think that you can see the space, people are in demand, companies want primary input companies, and I think it's going to continue for the foreseeable future.
John, can we just go out a little bit? And you mentioned inflation. Rios was saying that we're going to grow for 15 years and China's going to buy our commodities at an elevated rate for that long. Yeah. Can you just go out a year or two? Is inflation a problem, and is that going to kill our current our commodity bull market that's reappeared?
Matthew, I think that's a key which we're really focusing on. If you think that India has inflation rates near double digits. Now, a lot of people don't realise that. Inflation rates in China, 0.2% above their expectation. The catch cry at the moment is whether China and India are going to slow their economies from 8% to 6%, or are they just tampering on 8% to a potential 12%? And I think it's the latter, because they're just trying to control it. If it gets out of control, then I think that's a concern. Yeah. But I think there's a lot of good brains out there, trying to solve that problem.
Yeah, perhaps they could move on the yuan, which might lower their import prices. That thorny old issue. Thanks for joining us today. No Jonathan Barratt from Commodity Broking Services.